Seek records a huge loss. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd look at this article from news.com.au, which is discussing, well, the financial results that have been released by Seek today, and the big loss that it's reporting, which really isn't too much of a surprise. Now, for those of you that aren't familiar with Seek, we'll jump over here to have a look, and you can see this is the Seek website. It is a job advertisement website. I've used them. We've used them as well as LinkedIn, as well as Facebook, as a lot of platforms to find staff. They're not cheap. They're expensive to use. They're expensive to use to advertise on. And you can see here there's a whole lot of positions up. Barista, kitchen hand. I'm not signed in, so I don't know why it's coming up with all this stuff. Maybe these are the recent jobs that we're looking at, or maybe my staff the last time they were at Seek on my network were looking for barista jobs. I could tell you. But anyway, let's have a look here at the share price. We can see, so it's down 8.63%. We got jump back to 6 months. At February, they were up to $23, and now they're at $19.58. They bottomed out in March at $11.95. Job ads, if we have a look, we can see from the latest job advertisement information from ANZ, they shot back up 42%. Everyone, 42%. I need a coffee. Now, they went up 42%, but look at that tremendous fall they had there. Okay, so 42% may sound impressive, but it's a big slog to get back up to reasonable job levels or comparable job levels to where they were in the past. Advertisement. So let's have a look at this article, everyone. Recruiting website Seek reveals profit hit from the pandemic as the job markets dries up. Now, I think this is a very important leading indicator for the state of the economy. Any discussion of, well, a V-shaped recovery, I think, is out the window now. It's definitely out the window when you're looking at a ubiquitous job advertisement website that I suspect is involved. They are giving data to ANZ for their assessment is, well, in trouble or recording a big loss. Recruiting group Seek has revealed the financial damage caused by the pandemic, saying outlook for jobs remains uncertain. The Melbourne-based company posted a loss of $111.7 million for the year ended June 30, a 162% decline compared with the 2019 financial year. Seek's overall earnings before tax and interest declined by $40.1 million to $414.9 million for the 2020 financial year, a 9% drop compared with the previous corresponding period. The company said the fall was a direct result of the pandemic throwing the global economy into recession that dried up the jobs market. Total revenue rose 2% over the year to $1.6 billion. So total revenue is up. Perhaps that's earlier in the year. Seek Chief Executive Andrew Bassat said near-term profits would continue to be adversely affected while the pandemic persisted. The current macro outlook is highly uncertain, he said. Our near-term profits will be impacted by the pandemic, but our focus is on executing and investing for the long term. We are confident our investment and long-term focus is the right approach, as Seek's revenue opportunities remain large and under-penetrated. I mean, honestly, I haven't really looked at all in this business as a financial idea. I haven't even thought about it, but thinking that, it's something I made use of. How many businesses would make use of Seek, of advertising, as an alternative? Well, you do the whole pack. You do the social media. You do the LinkedIn. Does anyone even advertise in the newspapers anymore? I've just adjusted my camera here, everyone. Seek said it was unable to provide financial guidance for the 2021 financial year, while the global macroeconomic environment remained highly volatile and unpredictable. Mr. Bassat said Seek's ability to return to normal operating conditions will be highly dependent on the shape of the economic recovery. The near term will continue to pose challenges, but we will remain agile to take advantage of new growth opportunities that may arise, he said. Over the long term, our strategy and overall revenue opportunities remain intact, albeit the pandemic will likely impact the timeframe to achieve our $5 billion revenue aspirations. So, it's going to impact their aspirations of hitting a $5 billion revenue. Let's jump over here and have a look at their presentation that was released today. You can find all this data on the ASX too every day, all price-sensitive data. Depending on, I think they seem to be releasing it early in the morning at 7:30. So Seek is fulfilling its purpose on a large scale. So it's the market-leading business with large addressable markets, a population exposure of 2.9 billion, GDP exposure, C of 27% of global GDP. So strong assets and capabilities to drive our growth strategy. They've got 45 million candidates in Asia, Pacific, and Americas, 200,000 plus hirers. Their visits per annum, 1.2 billion. So Seek investments, 200 million plus candidates, 820,000 hirers, and 70 million students and learners. Entrepreneurial mindset with a track record of long-term value creation. TSR of 1,202% versus the ASX of 191. An IRR of 25% plus. Seek's purpose. We help people live more fulfilling and productive working lives and help organizations succeed. That's the mission. It sounds like something out of a Dilbert comic, really, or a management book. But fundamentally, if that is the aim, they want organizations to succeed, but you don't make it bloody cheap to advertise on your platform. So, Seek's actions are always guided by our purpose and long-term mindset. Throughout Seek's history, we've always taken a purpose-driven and long-term approach. Our purpose guides our strategy. We have strong conviction in prioritizing investment for the long term. So notice this continuing emphasis on long term, so that, they need to frame what's a significant loss in a good light. And the market's taken a slice off their share value, hasn't it? And they've got no predictions of next year. This approach has helped create significant long-term value. GFC, offering customer relief and prioritizing jobs, meant Seek ANZ emerged strongly from the GFC. Strategy of aggressive investment to scale market-leading businesses. In the short term, the pandemic presents some challenges and will adversely affect profits. Revenue will be impacted and timing of recovery is highly uncertain. However, undue focus on short-term costs will impact long-term defensibility and growth. If we continue to adopt a long-term approach, we expect Seek to emerge as a stronger business. Our market opportunity and strategic priority remains intact. If we invest and execute well, expect Seek to be very well positioned as conditions improve. Well, let's hope they have enough cash on hand or readily accessible sources of finance to fund any impact that they're going to have it take. So, ahead of government policy, we implemented work-from-home protocols supported by programs focusing on physical safety and mental health. Across the AP&A, we protected our permanent workforce. Customer response. We provided customer relief worth approximately $13 million. Okay. Higher support packages resulted in a reduction of Australian $13 million to AP&A revenue. Capital management response. Reduced discretionary costs and managed liquidity to support our capital needs. Continued investing in long-term competitiveness such as product innovation, technology, architecture, and data analysis capabilities. Increased Seek's balance sheet flexibility by obtaining increased covenant levels and raising $75 million of subordinated debt. Well, there you have it. So Seek's Australian $5 billion revenue aspirations and long-term growth strategy remain intact, but timing will be impacted by macro conditions. So there's no fundamental change to Seek's $5 million revenue aspirations. The pandemic will likely impact the timeframe to achieve this revenue opportunity. The original timeframe was financial year 2025, and too early to determine a revised target date. Over the long term, expect continued investment to translate into deeper customer engagement and profitability. So here's what they have. They've got, interesting, Seek Investments is online educator services, zarpin.com, I'm not familiar with that, and online employment, and M&A entrepreneurial activities. So, tangible progress made against our key priorities in financial year 2020. Here we go. We want to bring Seek Asia to ANZ baseline. Interesting. In financial year 20, Seek invested and executed against its key strategic drivers. We are confident in generating a strong return on investment when conditions return to normal. So Seek ANZ, launching new pricing models and contract structure, Seek Asia, lifting the baseline, achieving planned milestones for Uniform OK. This one I'm interested in. Investing in better leverage data and AI, delivering new mobile and chat functionality, realizing operating efficiencies through migration to online development. Want to scale up their partners and M&A entrepreneurial services. So we can see here, Seek's approach has created significant shareholder value. So ANZ-led growth, M&A-led growth, international education, product and tech evolution. So there's Seek, there's the ASX 200. Did any of you buy in the IPO guides? Let us know in the comments if you did. So key operating matrices or metrics. You can see here, I didn't realize Seek was that well positioned. So definitely has some advantages, doesn't it? Definitely has some advantages. Well positioned in this market. We'll have to see. So group revenue of 1.5 billion, up 3% versus PCP. Group earnings before interest, tax, debts and amortization was down 9% at 415 million. What else do we have here? I'll let you go through this in your own time. Anything here that's exciting? There you go. Historically strong cash flow. Operating cash flow is taken 100 million hit nearly. So they've been deployed into high returning capex and growth. So the final financial year 20 dividend. No final financial year 20 dividend. Once economic conditions improve, we intend to resume payment of dividends. So they've cut back on their dividend, guys. And there we have it. I'll let you go through the rest of this. I'll link to it in the comments down below if you're interested in going through it in any greater detail. But I think it's definitely an indicator of the state. Well, it is a aspect of the economy that we need to keep our eyes on. Job advertisements are important, and if a well-known online recruiting and job advertisement business like Seek is, taking a big hit, what's that telling us? Do you think that V-shaped recovery is still coming? As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions down below. If you're a fan and want to support the content I create here, there are a few ways you can. You can simply join the channel on YouTube or Patreon. Use any of our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint. Or support us via PayPal. Take care, everyone. I'll see you in the next episode.